Ladies and gentlemen, good day and welcome to E-Mudhra Limited Q1 FY24 earnings conference call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Raju Varanwal from Antique Stock Broking Limited. Thank you and over to you, sir.
Thank you, Neera. Good afternoon, everyone. On behalf of Antique Stock Broking Limited, I welcome you all to E-Mudhra Limited Q1 FY24 earnings conference call. Today, from the E-Mudhra Limited management side, we have with us Mr. Venkataraman Srinivasan, Executive Chairman, Mr. Sajid Singh, Chief Financial Officer, Mr. Kaushik Srinivasan, Senior Vice President, Product Development. Now, without further delay, I'll hand over the call to the Chairman, sir, for his opening remarks, post which we'll open the floor for question and answer session. Thank you, and over to you, sir.
Yeah, thank you very much. Good evening to all the participants. Welcome all of you to this meeting. So I wish to welcome each one of you to our 2024 first quarter investor and analyst briefing at E-Mudhra and thank all the shareholders for their support. Before I delve into our performance in this quarter, let me reiterate our mission. Our mission is to accelerate the world's transition to a secure and integrated digital society. Our commitment to safeguarding individuals, businesses and governments from cyber threats and enabling businesses to transition to paperless way of doing business is at the core of everything we do. This is in line with the new paradigm in cyber security called Zero Trust, which means never trust, always verify. As the cyber landscape continues to evolve, we continue to innovate to bring newer offerings to the market. Let us start by reviewing our financial performance during the past quarter. I am pleased to announce that we have once again achieved healthy growth in revenue and profits. Our consistent innovation and customer-centric approach have allowed us to forge strong relationship with our clients. About numbers, Saji will talk later. About the other qualitative aspects, I will talk now. Our global expansion efforts are starting to bear fruit with a number of wins in North America, Middle East and Africa geographies. We have also started winning business in the trust services, particularly SSL/TLS certificate business in international markets. We further continue to invest in local sales teams, expanded engagement with IT research community and marketing efforts as we continue to go after both greenfield and replacement opportunities in emerging and developed markets respectively. We also completed acquisition of High Contact towards the end of last quarter and are now positioning our solutions into their client base in education, financial services for cross-selling and upselling opportunities. In India, both trust services and enterprise solutions continue to show upward trend on a year-on-year basis. We saw continued price stability in the trust services business for sale through partners. The revenue is expected to improve in the second quarter as a consequence of e-government and tax filing season. Our direct-to-customer sale of digital signature certificates continues to grow in line with historical trends. Impetus as a result of e-sign and e-stamping for digitization has helped us win several e-sign deals in banking and financial services space in India. The order book for enterprise solutions in India continues to be robust and we anticipate uptick in the enterprise business as new large government and BFSI projects for the year in cyber security and paperless transformation get executed. We also continue to collaborate and partner with the leading technology companies and our emSigner product is now live on the AWS marketplace, allowing AWS customers easy access and use of the product. Our emSigner product is also now live on Microsoft and Google platforms as extensions, enabling paperless workflows without having to leave those platforms such as Word and Outlook. The cyber security industry continues to evolve, and cyber criminals continue to become more sophisticated, and their attacks are increasingly disruptive and damaging. We continue to invest in research and development to try to stay ahead of the curve and developing cutting-edge solutions. These include areas such as post-quantum cryptography and generative AI, which can help us build differentiated product capabilities when positioning zero trust. Furthermore, our corporate social responsibility initiatives have continued to drive positive change. We have actively engaged with educational institutions to promote cybersecurity awareness and nurture future talent in this critical field. Additionally, we have participated in various community outreach programs, making a meaningful impact on society beyond the realm of business. As we move into the next quarter and beyond, we are confident in our ability to sustain our growth trajectory and continue to reinvest some of our margins into driving this growth. Our strategic roadmap includes further advancements in zero trust, post-quantum cryptography, and generative AI, enhancing our ability to increase our reach. In closing, I would like to extend my gratitude to all the participants on the call and to our shareholders for their support and belief in our vision and mission. Now I am going to hand over the call to our CFO, Saji Lewis, who will take you through the numbers. Thank you.
Thank you, Chairman. Good afternoon, everyone. Our total income for Q1 FY2024 increased year-on-year basis by 52.9%, reaching rupees 807.3 million. The significant revenue growth was primarily driven by the success of our enterprise solution in overseas markets. Moving on to our EBITDA, which is 247.5 million in Q1 FY2024, a year-on-year growth of 16.9% with a margin of 30.7%. Additionally, our net profit grew by 19.4% on year-on-year basis, reaching rupees 163.7 million with a margin of 20.3%. It is important to note that despite our investments in overseas markets to fuel future growth, we have managed to sustain net profit margin. Now let us take a closer look at our enterprise revenue split. We had a split of 25:75 between India and international markets. Furthermore, the revenue distribution between partner and direct sales was at 24:76. Lastly, our enterprise revenue division between cybersecurity and paperless segments stood at 71:29. With regard to our trust service revenue, we observed a balanced distribution of conventional digital signature revenue between channel and retail with a split of 52:48. These numbers reflect our company's dedication to growth. We are optimistic about the future and are committed to pursuing our strategic goals. Thank you for your attention, and I now open the floor for questions and discussions.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask the question. The first question is from the line of Amarnath Nath from Ministry of Finance of Oman. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yes. So my first question is, though the revenue growth is quite healthy in the expected line, the margin profile continuously quarter after quarter is decreasing. If I see from March 2022, from 41% and now it is coming very close to 30%. Now, what do you attribute to this? The growth in the revenue and continuous lower EBITDA margin?
Yeah, the key thing is, if you see in the last 1.5 years, to grow the international business, we have to expand internationally. For example, now we have set up a branch in Saudi Arabia. We have set up a branch in Qatar. Then we have set up a subsidiary in Kenya. Then in the US, we have recruited 2-3 senior people, almost 4 senior people. So like this everywhere. And we have put some people in our office in Amsterdam and all that. And as you are very well aware, the salaries in all those places are at least 4 to 5 times the salaries in India. And for that, the effect is starting to come, but always there will be a lag in the effect which will come over time. So that's where the cost of if you see the cost of our employee salary and other thing, and also the other overheads in those geographies, the office space, then their travel everywhere. So all this has gone up. So that's where the margin percentage is reducing over time, but still we have a good margin. Almost if you see PAT margin is 20%. If you see quite a lot of even US product companies, they don't get anywhere at 20% PAT margin. So that's why as long as we are able to achieve the growth without any negative margin and maintain the PAT margin or 1 or 2% drop in the PAT margin, I am not worried, because in the long run it is going to give a lot more business and lot more absolute number in the profitability. Though from a percentage perspective it could reduce, but the absolute number of profits will increase, and thereby the EPS will increase over time. So that's where it is.
Considering what you just now said, so it was quite expected also that as you grow more internationally, there will be a pressure on the margin because of the high costs. Now, considering the current growth scenario and your expansion plan outside geographies, why do you think that this EBITDA margin is going to settle? Is this 30% where we will be more or less near here, or it can go further down to some percentage? We just wanted to know this outlook, because your growth guidance for revenue we know around 25% plus. But if this cost structure continues to move up, maybe the revenue will come on lag. Why do you think that this EBITDA margin will settle down?
I don't think it will go down, because already we are starting to see the results, and we are also not proposing any further big expansion at present, because we have recently established all these offices. So we will not increase on the cost. So with the result, I do not think it will go down further, but it may be maintained at this level, or could be a 0.5%, 1% increase also could be possible, depending on how much business comes. But we do not want to put too many immediately other offices and all that. So gradually we will go up. So that's why it may not decrease further.
My last question would be, sir, considering your recent expansions, as you just now said, in US and Amsterdam, just a minute, give me a second. Am I audible now?
Yes.
Yeah. So, with considering the different geography which you achieved, now your past growth guidance of 25% plus, is it still valid, or considering the higher revenue coming in the future, you would like to revise your growth guidance going forward?
No, at present we don't want to revise, but mostly we can, if you see currently we have achieved whatever that 80 crore revenue in the first quarter, so further growth is possible. So that's why, but at this juncture we do not want to revise upwards or anything, but definitely whatever guidance we have given is quite possible and easily achievable, if at all some positive surprise can be there.
And sir, are we doing something specifically onto the AI front as well, along with either in the cyber security area or in any other area?
This Kaushik will answer, being a technical question.
Yeah, we are continuously working on embedding artificial intelligence and also the new areas of generative AI into our technology. In cybersecurity, particularly, this concept of adaptive authentication is gaining steam, where based on user behavior and essentially machine learning, we are able to understand if there's any anomaly in such behavior. The other big area that we are looking to also do research and development is in the area of generative AI. Particularly, we are dealing with a lot of documents on our paperless platform, and how can we assess risk in that context using generative AI is one area of exploration. And the second area is more internally, how do we enable various teams from support to sales to marketing with generative AI is another big area. The third area around cybersecurity is mostly in the area of this post-quantum cryptography, which also a lot of interest is currently being shown. Right? So these are the three areas, one on the AI and two on post-quantum cryptography is what we are working on.
Thank you. I will come back in the queue.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Surabhi from Bellwether. Please go ahead.
Yeah, thank you so much for the opportunity. So, would it be possible for you to share what is the order book for us in our hand and what is the proportion of the hot and warm pipeline for us?
Maybe that readily I do not have. Maybe separately we can give in line with what we gave in the last quarter. But it is quite healthy. And for our guidance of 25%, we don't see any risk. But anyway, separately we can share the total pipeline. No, we are sharing the order book. Pipeline we don't share. So order book we will share.
Okay. And secondly, one of the key project wins for us was the rollout of PKI infrastructure in a country in Africa. So for that, can you throw some light on how big or how significant is this entire project for us?
You mean from a revenue contribution or more from a project significance?
Project significance, and broadly, this seems to be like a rollout for an entire country, not just a company-specific project. So, wanted to hear your thoughts on how significant it is.
No, so without naming the country, it's a significant country in the East African region. They are currently on the path to establishing a digital signature infrastructure as the country itself is embarking on a complete paperless transformation driven by their e-governance agenda. So very similar to what India is building in terms of the digital public infrastructure, that country is also aiming to do something similar. And this project will sort of establish that backbone. And once this is in place, then a lot of opportunities will come in the e-government and banking and financial services space for paperless transformation. So it sort of gives us an early mover advantage in that country to go and drive something similar to what is being done in India. From a revenue significance?
Revenue perspective, it will be to start with, the initial project is around $1.6 million and over time it can grow.
Okay, so the deal size is $1.6 million.
Yeah.
Okay. Thank you. That's it from me.
Thank you. Next question is from the line of Vivek Sethia from HDFC Securities. Please go ahead.
Hi. So I had a couple of questions on revenue. If you could guide me on for enterprise solutions, why has been there a decline in the enterprise solutions India business? If you could help with that.
Yeah, in India, enterprise business quite a bit depends on the government also. And in the government, if you see generally cycle-wise, the last quarter of every financial year is very attractive, then the first quarter becomes really lackluster kind of quarter. So that's where the India enterprise revenue this quarter has been less. But globally it has grown. But from the coming quarters, healthy pipeline is there and healthy order book which can be executed is there. So again, most of the decline will be overcome from the coming quarters.
So how much growth can we expect within the India business of enterprise solutions? Any ballpark percentage range?
Separately, we cannot estimate India enterprise alone. So overall, that is the guidance what we have given. Because if you see, when we are in three segments, one segment goes down, one segment takes care, other segment goes down, some segment takes care. So segment by segment, assuring that this is the growth will happen is a very tricky matter.
So the line for the participant dropped. We move on to the next participant. Next question is from the line of Adesh from Motilal Oswal. Please go ahead.
Hello, sir. Just on the previous part.
Sorry to interrupt you. If you could speak through the handset.
Yeah. Is it better now? Hello?
There is maybe disturbance coming from the line.
Is it better now?
Yeah, go ahead.
Yeah. So just wanted to know on the previous participant's question that apart from declining in India business, we are also seeing some margin compression over there. So is it fairly because of the operating leverage, and once growth comes back, we should see margins also improving in our India enterprise business again?
Yeah, correct.
Right. Thank you, sir. I'll come back into.
Yeah.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Srinath from Bellwether Capital. Please go ahead.
Hi, sir. Wanted to understand if Icon numbers are included in this quarter's numbers. Have we been able to consolidate the numbers? And second is, where do we stand on integration of our platform with Icon, both on, mining their customers for no paperless solutions, as well as using their, team as a base for servicing US? And the last one, Kaushik, wanted to understand that they are into cloud infrastructure management, which is also a reasonably sized opportunity in the US. Are we looking to kind of help them out with some product build-out based in Bangalore? Because, these kind of products, we would be probably in a better position to build out a core product. Does this area of cloud infrastructure management kind of appeal to you as a segment that, even we can grow along with them over a period of time?
Yeah, Icon integration perspective, last 1 week or some 6 days it has been integrated because we filed the completion of everything on June 24th or June 25th something. So that way that portion, small portion is integrated into the current quarter. Then from the integration of the team and the business perspective, already our sales team is working along with Icon sales team, and Icon has introduced our sales teams to five different customers in the education segment and one or two in the BFSI segment. Out of that, one particular customer, the talk has gone in a much advanced level, and exactly they are in the process of detailing out what they would take from our paperless transformation solution. So that way the synergy and all this from a sales perspective is already going on. From the technical perspective, maybe Kaushik may explain.
Yeah, and specifically on cloud infrastructure management, we have not explored that area, because currently the focus is one, how can we cross-sell our products into their existing clients. But we'll take that point and internally evaluate what kind of meaningful opportunity could arise, and then accordingly take this forward.
Got it. And so largely the integration is underway on both the sides, both on product as well as on marketing. Is that a fair assessment? And from an accounting perspective, next quarter the numbers will show for Icon in our numbers, or it's already showing in this quarter?
No, next quarter it will show. This quarter that 6 days or 7 days is shown, but in the next quarter it will show.
Got it. And sir, I also observed that we have made one hire from Nexus, one senior hire. This happened some time back itself. So are we looking at expanding some of our, certification products in the private sector market in US? Is that something that we are setting up for?
Yeah, that is what we are attempting, because our M-Sign PK is there. With M-Sign PK, if we get certain certifications in the US, we can penetrate the US market also. That's where we have hired this Scott Ria, who came from the DigiCert, not from Entrust, and prior to that he was working in Entrust and all those things, and he knows the system and the equations in the US market well. And after he came, we have also got one of the certification and some 2-3 more other certification we have to get. So the idea is to push our product into that market also, the trust service product.
Okay, and this will be like a trust service inside a particular corporate for walled within all the employees. So is it something like that, or is my understanding way off?
SSL certificate, private PKI certificate, and various types of certificates which are used for encrypting the data. So those kind of things, maybe Kaushik can explain.
So across the enterprise IT infrastructure, the website certificates also for various internal IT equipment like firewall, VPN access, those kinds of things, right? So that is the space that we are going after. Broadly, this is called what is called certificate lifecycle management. and Scott is helping us. Also, Scott helped us get into this IGTF, which is a global federation for interoperability in the trust services, and now E-Mudhra is also a member there. So this is giving us a lot more visibility in the American markets.
Perfect. Thanks a lot, guys. I'll get back into the question.
Thank you.
Thank you. Next question is from the line of Vivek Setia from HDFC Securities. Please go ahead.
Hi, actually my line got disconnected in between. So, continuing with my question on the India enterprise business, like how do you see that moving forward this year, going forward the next year as well, purely in terms of revenue and also margins, because the margins have also, come down if you look at it segment-wise for both enterprise India and global. So, if you could throw some light on that.
Yeah, if you see the India enterprise business per se and the India trust service business, this last quarter has been, because if you see the enterprise business, it consists of a large part government business also. This government business predominantly in the last quarter of financial year, a good business comes, the first quarter it is weak. Similarly, the India trust service business also, it is associated with income tax filing, company law filing and many things. So first quarter generally is weak. That's why the India business as such was weaker in the first quarter. Now when it comes back, yes, definitely some margin improvement will be there. But overall, when we are expanding the other geographies, appointing some people internationally and all that, so little margin increase could get offset by the other margin effect, other increase in cost also. That's why while India margin definitely, yes, it could increase, but I do not want to project that the overall margin could increase in a big way.
About enterprise global, the margins have come down this quarter, and it has come down significantly. So, is it purely attributable to you setting up new offices in the US, Amsterdam, and because of increase in cost? Is it purely attributable to that?
Yeah. Almost the cost has increased by 3 to 4 crore per quarter. That level of increase has happened. So, due to not only Qatar and all that, even USA, Amsterdam, then Kenya, then Qatar, then Saudi Arabia, everywhere. And even some sales team we have put in Philippines also. But it will all give result in the next 2-3 quarters.
Okay. And within the enterprise solutions business, how do you see this mix evolving? Because I don't know if I'm right or wrong, but as per our last conversation, I think you had said that you expect paperless to go at around somewhere 35 to 40%. Of the total enterprise business in terms of revenue, but as per your presentation this quarter it's only 29%. So if you could throw some light on that as well.
The cyber security, the CA business is evolving in a much bigger way, and the value of each transaction is also quite higher. So that's where, though initially we thought that the paperless segment will evolve in a bigger way, though it is evolving, the value per transaction is hardly some $200,000, $300,000 even abroad per year, or sometime even for the whole license. Whereas this CA, MCA solution, wherever it goes, the value is around $1 million, $700,000, sometimes $1.5 million also. That's why the value wise now the cyber security is really increasing in a big way. You want to complete?
No, that is correct, because this huge push of zero trust by various global IT research firms such as Gartner, Forrester, and all of the board level focus on cyber security is giving a lot of momentum in many countries and organizations. And as our chairman said, the deal values are also much larger.
Yes.
Okay. So within the cyber security, which product has contributed higher? Like if 71% is cyber security, then how much is MCA and how much is E-Match?
More and more they are going as integrated offerings, because MCA provides the PKI, E-Mass provides the PKI validation, and then our M-Sign certificates are there to basically deploy these certificates. So it is case-to-case basis, very hard to break it down and say each product is essentially contributing. And on a quarterly basis, again, even harder to do.
So, like going forward, should we as, while trying to understand the company, should we look at it as a whole or two separate products?
No, we can as of now look at it as separate product, but over next 6 months to 9 months more as a integrated product, because the certificate life cycle, that what we call CLM, which earlier what we were calling certificate management product. That product is also getting integrated with the CA solution. So on a combined basis, it produces much better value. So that's why maybe over time we can integrate with the product.
Okay. And within the trust services, you said that the breakup is with 50 to 48 channel partners and retail. So, what is the revenue share from the new products like e-sign, SSL? If you could give an idea on that.
E-sign, the SSL again, the growth is there. What? Yeah.
Sorry?
We will get back on that because the CFO will calculate and get back to you.
Okay. And just last question on the EBITDA margin. So I remember a couple of quarters back, you had sort of given a ballpark range that, you expect EBITDA margin to be around the 37-38% mark, whereas now in Q1 it has dropped below 30%. So I mean, taking from what you said that, Q1 is supposed to be the weakest of the 4 quarters, how do you see the margins evolving going forward? Because FY2023 also it was around 35%. It fell down from 36.7%.
One choice is to go slow on the growth, so that do not open several offices and all that. But we thought that everywhere there is a lot of momentum, cyber security is a big momentum and all that. So that's why simultaneously we started Saudi Arabia office, we started Qatar office, in Philippines we put some people, US we put some people. So on all this, if you see foreign geography, the salaries are all 5, 6 times, 8 times the salaries in India. So that's where, though EBITDA margin-wise, margin may be less, but we are aiming at more profitability so that EPS growth can be there. And another thing is the momentum not to leave the market wide open. Over time, we can also penetrate the market. So from that perspective, if you see the top line is also 1 year to year-on-year basis, whatever it is there, 50% increase is there. So all these factors has to be kept in mind, and finally we have to aim at the more EPS rather than seeing only the margin. So that's how we have been working. So that's where though there is a little reduction in margin, we didn't want to not to do the foreign offices. We have started the offices everywhere. Momentum is picking up. The lead generation is happening and all that.
Okay. Thank you. Yeah, that's it from me.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Amit Chandra from HDFC Securities. Please go ahead.
Hi sir, and thanks for the opportunity. So my question is on the e-sign segment. So obviously you said that it's a growth driver, but if you can elaborate on what is the opportunity you see in e-sign, because it's a growing segment, and whether we are present in e-sign only in India, or are we offering it outside India also, and is it only included in trust services, or is it a part of the enterprise offerings also? And in terms of revenue contribution, if you can tell us how much we have derived from e-sign also, because if you see the competition there in e-sign, a lot of players are there, and most of them are government agencies also who offer e-sign services. So how do we differentiate there in terms of e-sign?
If you see the India e-sign, what has happened is while e-signature started with 35 rupees, it has now ended up with 1.7 rupees per e-sign or 2 rupees per e-sign. Because the NSDL also has crashed the price, and all the other people who are resellers have also crashed the price. Then there is a CDAC, which is a government organization. They are offering for 2 rupees and 1.7 rupees and all this. So with this, while we are penetrating, while there is a lot of business coming, number of banks opting for e-sign and all that, in our scheme of things are expecting the 350 crore revenue, 340 crore revenue, even if some 10 crore e-sign happens, which is impossible to happen. Maybe 2 crore, 3 crore e-sign, 4 crore e-sign can happen. Still the revenue out of e-sign can be only 7-8 crore. So that is the situation today. That's why I am not highlighting the e-sign as a big separate segment. So that's where we are also consciously planning how do we enter into e-sign in Kenya, e-sign in some other geography through our global signing route. Because in all those other countries, the e-sign is sold at almost $1 per signature or something like that, or 10 riyal per signature in Saudi Arabia, 10 dirham per signature in Dubai, and those kind of things. Whereas here it is crashed to less than 2 rupees. So this is the problem. So that's where it is there as a segment. Our growth is quite good. We are getting number of customers, and we are now trying to do as a platform, including M-Signer platform plus E-Sign plus E-Stamp paper. And in that platform, lot of big companies have come. Several small finance bank has come, big banks have come. Then the pure finance companies have come. So all these are there, and the number of signatures are continuously increasing. But it may not significantly contribute to the overall top line.
Other than the enterprise business, mostly the enterprise is global. How is the sales being driven there? Is it mostly through the partnership ecosystem, or we have our in-house sales team? So if you can split the pipeline or the order book in terms of how much is SI driven and how much is in-house sales driven?
No, that is very difficult. Even in-house sales time, several times drive it through partnership because the winnability increases. And partnership also inside sales team is continuously working. So that way each deal separating it is very, very tough. So all kind of deals are there.
So, I'm just trying to understand the strength of the business.
On the whole, directly driven sales is 75% and 25% is partner driven.
Okay. So in terms of signing the partner, are we there with like most of the global like large implementation partners, or are we still looking to sign some more implementation partners, or we are waiting for some size, then we can opt for more? And how is the competition there in terms of pricing?
Process, we have a separate, like inside sales team, there is a partner management team who continuously enroll partners, but we already have several large partners like TGS, Infosys and various other people, Tech Mahindra and all these partners. And nowadays we are also partnering with the other big four firms like Deloitte, KPMG and those kind of partners. Then we are also having product partnerships. So there are several kind of partnerships, and all the partnerships are working. And now we have put our product in the AWS platform so that automatically people can download from there and immediately install it.
Okay, so thank you.
Yeah. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Muskan from Bastion Research. Please go ahead.
Congratulations, sir, on great performance on the top line front. Margins have been consistently declining in the last 5 quarters.
Your voice is not coming clearly. Can you please speak through the handset?
Now audible?
Hello.
Hello. Am I now audible?
Yes, can you please speak a little louder?
Margins have been consistently declining in the last 5 quarters. Also, your operating expenses as a percentage of revenue have shot up from 10% to 22.2% on a year-on-year basis. What constitutes this operating expense and what is driving this expense? Because before 2023, none of the years had these expenses more than 6 to 10% of revenue. Can you please highlight which product is driving this and why?
Voice is not clear. Are you asking about why the operating expense went up?
Yes, as a percentage of revenue.
Yeah, operating expense, as I explained earlier, we have opened several geographies and recruited number of sales people and sales teams in multiple geographies. So once you do that, automatically the associated administrative expenses, the rent rates and taxes, everything goes up. And even to support all that, we have increased the number of people in the corporate office. So that's where the salary has also increased, the other operating expense also has increased, and the top line has also increased. Compared to the last year first quarter to this year first quarter, 50% growth in top line is there. So instead of looking at only the margin, if you see the absolute profitability over time, we want the absolute profit and the EPS to increase. And in between because the first quarter, as I said, one segment there was also a little problem in the Indian enterprise segment and the Indian service segment. So once these overcome, then again the things will look more positive than the current.
But can you please...
Also is there. So we have to continuously to derive more inward lead. We need to engage the Gartners, then the other IDC and various technology research organizations. And each research nowadays is very costly. Everything comes at a price of $80,000 kind of range. So.
Okay. And so why has the domestic enterprise revenue declined on a quarter-on-quarter basis?
Domestic enterprise, it's already explained to another question. Because of the, if you see, in domestic enterprise, the government is a major segment and the government finalizes most of the order in the last quarter of a financial year. And the first quarter generally it is very weak. So that's where it has reduced.
Okay, sir.
Thank you. Participants, you may press star and 1 to ask the question. Next follow-up question is from line of Amarnath from Ministry of Finance of Oman. Please go ahead.
Hello.
Yes.
Yeah. Thank you for the follow-up opportunity. Just to go by what you just say, and several participants also answer questions. What we are understanding that the cost part in the international locations are many times of what the Indian location costs are. However, we may assume, according to the revenue per unit, whether it is a digital certificate or e-sign, as you are also explaining, that part also far higher than what you can charge in India. So net-net, can we assume as your revenue growth from those new international projections comes in, overall margin and profitability will be far higher compared to the counterpart of Indian part of the same business? Means if I do the same business in those areas, at the initial it may be having a cost because the revenue will follow, but once they establish, the overall profitability and EBITDA margin will be higher compared to the corresponding same business what we are doing in India. If my understanding is correct?
No, it is correct if I just extrapolate the Excel sheets. But in actual business, what happens once you are there for 2-3 years, some other competitor comes, then they will try to reduce the price, they will try to poach some people. So many such dynamic changes, no. So that's where exactly you cannot say just because of this alone the profit will shoot up or will not. Just if we take only these two factors, what you are saying is correct.
Just to associate, good that you raised this question. That was my second question. What kind of a business mode we have? Means, is this easy for the competitor to come in the business and easily capture the market share or business share what you are doing? Or is there some kind of a moat around that to protect the competitor to come easily inside the business? Because as you know, as you anyway say, this is a very high margin, high growth business which will normally attract the competitors or competition quite quickly. So in our business, if you say, what is the moat which can protect our competitive advantage, either in India or in the outside global business where you are trading?
No, if you see the technology landscape, currently the moat is there. And no technology has moat forever. Moat is only a temporary phenomenon because actually gradually every technology is becoming more and more open source. Then the chat GPT is coming, the AI is coming, everything is there. So that's why continuously, currently we have created a moat. That's why not too much competition, only 4 or 5 competitors in the world for our solution. So there are DigiCert, there is Entrust, there is some 4 or 5 companies. Then if you see the paperless transformation, DocuSign, Adobe, these kind of companies. But over time, more and more such companies may be able to come. Then we have to find another niche. So this is a continuous process. So in this process now, with more and more open source technology, creating a very long-standing 5-year, 10-year moat is also very difficult. So within this framework, we have to continuously work.
Yeah. So, but as the competitor coming, sir, the market size itself is expanding quite rapidly, right? That means if the market size become very big compared to what we are today, then it can accommodate even the higher number of competitors, and still the growth prospect can continue.
Yeah. I mean, definitely. That is what we are also hoping. That's where I am also saying that 25% growth is possible and we will be able to maintain the margin. Maybe we can increase the margin and all that. But we cannot take totally this is what will happen. That's why the margin can go up from 20% to 30%. That kind of thing I do not want to hazard again.
And what is our cash position now, sir?
Cash position is good. So as of around 90 crore or something is there, 90 crore. As of March, 120 crore was there. Then this quarter little bit, we did this acquisition also. So for that acquisition, around 50 crore has gone. So the balance around 70 crore something is there.
So will there be any planning for the dividend acceleration? Because I don't know, generally the capex part of your business is quite low. Of course, I don't know about how the things will be in the international location.
We have already declared and paid the dividend.
No, I'm talking about in the future. If this cash generation continues, and as you say, the future expansion plan is quite halted at the moment.
As of now, I feel that every year we should be able to pay the dividend.
Thank you, sir.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Next question is from the line of Parikshit Kabra from Weekday Advisors. Please go ahead.
Hi, can you hear me?
Yeah.
Okay, first of all, congratulations on your results. And secondly, since you mentioned that you have launched it now on AWS as a self-serving product, any early signs on how much uptake is there?
We've just launched and went live. Now only we have to work with our clients to basically enable this. But what this means is now customers wanting to deploy the product on AWS or on private clouds can do it, pretty simply. And hopefully this will accelerate our cycle to do POC. We also are working with AWS to reach out through their network to the end customers. And hopefully that will give us some, momentum in the coming quarters.
Okay, thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Participants, you may press star and 1 to ask a question. Anyone who wishes to ask a question may press star and 1. As there are no further questions, I now hand the conference over to the management for closing comments.
Yeah, thank you very much. Thanks to one and all for attending this conference and raising varied questions, and we could answer whatever question we could not answer. You can approach our CFO. He will provide the details. So with that, we would like to end the call. Thank you very much once again.
Thank you very much. On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Please subscribe and press the bell icon to never miss another update. Please like, share and comment.